Hello, welcome everyone. I'm Teresa Edwards, the founder and CEO of Teshley Solutions LLC, an education consulting firm where our motto is K through 12 survival skills and strategies. I want to thank you for joining us for how will the changes to FAFSA impact you. This is an important event. We have a lot to cover, and I am so pleased that Robert Falcone has joined us. Bob is the president and founder of the College Funding Solutions and a financial advisor, and a founder of Falcon Wealth Managers in Concordville, Pennsylvania. He is a licensed CPA and CFP professional. Bob is one of less than 150 professionals to have earned the Certified College Financial Consultant designation, which is why I wanted him on for this event. He holds a BS in accounting from Villanova University and an MBA from Keenan Folger Business School, UNC Chapel Hill. His career includes 9 years of Big Four manager level tax experience and 15 years of pharmaceutical forecasting experience. Bob has an unmatched depth of balance of tax and financial expertise to support his college financial planning. And with that, I am going to bring on Mr. Falcone. Hi, Bob. Nice to see you again.
Grace, great to be on board. Thank you so much for having me today.
Okay, so before we begin, I am just going to do one little disclaimer here before we dive into this. So that everyone understands what we are really doing with this event. And where am I here? I am here. Okay, so the information provided here is an overview of the FAFSA Simplification Act and its potential impacts on students and their families. The discussion tonight should not be construed as definitive guidance. Financial aid laws are fluid and subject to change. Outcomes may vary significantly, significantly depending on income, state of residence, and institution attended. You should consult with the financial aid office of your school and your state Department of Education for complete information and guidance. And with that bit of housekeeping out of the way with, we can go back to, all right, Bob, we first met because I read some articles that you had written, and I was impressed with your depth of knowledge. And when I first read the legislation, in the beginning, it looked really good. And then towards the end, not so much. So I always like to start with the good. I think we should start there. But just in a Reader's Digest condensed version, can you explain what the FAFSA Simplification Act is?
Yes, it's designed to, like the title says, make the folks that prepare those of us that have kids in college, when you prepare the FAFSA, to make it just a little bit easier. So one of the biggest hallmarks of the FAFSA Simplification Act is to reduce the number of questions, to eliminate some of its complexity. It also does increase aid to those with lower incomes. But as you said, there's good and bad with any act. On the bad side, there's some things which, do detract from it, that are some pitfalls that we should be wary of before it comes time for us to fill out that FAFSA this coming fall.
Right, except it won't really be this coming fall. Well, I guess technically it may still be the fall, but not the fall that most people are accustomed to. It will, if for those of you that have not heard, the FAFSA for the 2024-2025 school year will not be released on October 1, and we don't have a definitive date in December, do we?
I don't think we do. I've heard December 1, but they said they're staying pretty vague about it. So with the complexity is they're issuing this. The Department of Education has to issue it, but all the colleges have to have their systems modified also. So you can understand the huge complexities that might be involved in making sure that that these two, all the institutions and the FAFSA, can actually communicate with each other.
Right. Now, yeah, I have been monitoring that. I sit on a state board of which all of the public colleges are also on the board. And I've been, how's it going? And well, yeah, heads just saying it's going. Um,
Yeah,
it, it's been almost 3 years. You would have thought that that was enough time, but evidently not.
yeah.
Okay, so right, so we have a huge reduction in questions. I think it went from 108 to 36, 36, 38. Is that correct?
108 to 36, yes. And in general, they're trying to align the FAFSA a little bit more with the tax return. And they also, like I said, by eliminating some of those questions, they removed some questions, for example, about the selective service or drug convictions. And they're just trying to make it a little bit more so that you're not clicking so many boxes when you're going through when you prepare it the next time.
Right. Yeah, that was I wanted to talk about. Yeah, they removed the selective service and drug convictions, and just for a moment, and there some people, everything's always contentious these days. But my understanding now is that a past minor drug conviction will no longer bar you from being eligible for aid.
Correct. And then you also no longer have to register for the selective service. So that might have, held some people up in the past.
Right. Okay. And my understanding is that there's also eligibility for incarcerated individuals. I think this is the one that has gotten the most flack for federally approved programs. I'm actually in favor of this. I mean, I know there's some people who are just going to abuse it and return to a life of crime, but giving people the possibility of it improving themselves and then going out and obtaining gainful employment to me is a positive.
Yes, yes. So they did say that incarcerated folks are now also available or eligible for Pell Grants. So, to your point, maybe that education can help them, right the ship and when they do leave prison, they'll be able to, start a new life.
That is the hope. Okay. So we've gone through that. Now, there was also a repeal of the SULA, and if you can explain to everyone what SULA is and what removing that limit means, because when I first read it, I thought it seemed like a trap to get students to get more, take out more loans. But then when reading it again, I said, oh, okay, maybe this is something different. So explain, do you understand it?
Yeah, not too many people are familiar with SULA, and even in my practice, it's not something that I've come across very much, but SULA stands for Subsidized Usage Limit Restriction. And under the old FAFSA, there was a limit. It said that if you're going to college for a 4-year education, there's this 150% rule under SULA that basically says if you have subsidized loans through the government, they will only be subsidized for 150% of the term of your program. So if you're going for a 4-year degree, then it means you really have to finish it up within 6 years. Otherwise that subsidized piece of your loans will go away, and you'll have to pay interest on the loans as they, or the interest will compound if you don't pay the interest on them while you're in school.
Okay. All right. So I think we've talked about most of the positives, unless there's something you can think of that I've left out.
No, those are some, we did hit on some of the bigger ones. And again, we're going to, just to clarify for the listeners, we're talking today about the FAFSA only. For those students that attend other schools that take the second form, the CSS profile, you want to close your ears to this, because these rules, these changes do not apply to the CSS, at least at this point. I'll bounce back and forth between the CSS and the FAFSA as we talk about the individual topics, but just know that if you're looking to attend a Cornell or a Villanova or a school like that, that these rules will not apply, because the CSS profile, the second form, will take precedence on how they calculate your need.
Yeah, and I did have 1 or 2 CSS questions lined up for you, because I know that a number of the universities do require that anyway. And I think we had a conversation on how I was so grateful when my daughter chose a school that didn't require the CESS profile. But that was over a decade ago, so things may have been a little bit, maybe a little bit different now. Okay, I'm going to go to some of the changes that are probably the most problematic. I'm going to end with the big one last. There is now a change in which parent has to, for divorced and separated families, there's a change in who has to file the FAFSA. Could you explain that, please?
Yes, yes. So just to level set, under current law, with the current FAFSA, the parent with which the student lives the greater amount of time, and that's 183 days out of the 365 days, ending on the date you push that button to submit the FAFSA. So they call that the custodial parent is the one that would fill out the FAFSA. So they're not looking at any income, and that's why in my practice I would always recommend that in these divorce situations that the student live with the parent who makes the least amount of money, has the least amount of assets, because they're more likely to get greater aid. So it was purely about who the student lived with the most out of the last year, that last calendar year, ending on the date you file the FAFSA. That's all gone now. Under the new rules, the person that provides the greatest amount of financial support to the student will be the parent that files the FAFSA. And it's not who provided the greatest amount of support over the last 365 days. It's based on the income year that the FAFSA is based on. So for students that are starting college in the fall of 2024, that would be the 2022 tax return. So you would look and say, all right, for the calendar year 2022, which parent provided the greatest amount of financial support? And whichever parent that is, that's the person who has to go ahead and file the FAFSA, reporting his or her income and assets.
Okay, so depending on the range in the difference in salary earned by the parents, it could or could not make a significant difference.
Correct, correct. I'm going to fishtail in. We're going to talk about another problem a little bit later. I'm going to combine these two problems and show how it could be a real big problem for some families.
Okay. Next question is on previously income that didn't have to be reported previously from small businesses or small family farms, and if you could give everyone what actually qualifies as a small family farm, and what the income reporting requirements are now.
Certainly, certainly. So again, back in the old FAFSA days, that's the FAFSA, this is the last year of the old FAFSA. If you have a small business, and they define a small business as one that has fewer than 100 employees. If you have a small business, you did not have to report the value of that business as an asset on the FAFSA. Under the new FAFSA, that exclusion has gone away. So if you have a business with any employees, the value of that business, and this is going to be very, very vague because, you know, valuation, as we all know, especially CPAs, it's more of an art than a science as to how you can value something. There's multiple ways you can do it. So that's going to be a source of contention and probably of negotiation too, with some of the colleges when it comes to reporting. What is the value of my, let's just say my consulting practice? My consulting practice is really just based on the expertise that I have, and whatever money I have in my bank account is going to be the value of my business. If I had a construction company, on the other hand, I'm going to have trucks, I'm going to have assets, ladders. If I'm a roofer, all that equipment will have to be valued, or that business will have to be valued. And it'll be interesting to see what criteria they use to actually verify the value that the parent puts forth on that FAFSA. So that's going to be, that'll be interesting to see how that all plays out.
Okay, so that hasn't been solidified yet, is what you're saying.
Correct. There's, like I said, even when you value a house. There's a million different ways you can do that, or value a rental property. You can base it based on you can capitalize the rental payments. You can look on Zillow to see what that house is worth. There's a bunch of different ways you can do it. And I haven't dug deep enough into it to see what they're going to look for, but generally I'm assuming it's going to be a discussion between the family, the parents, and the school when it comes into negotiating. That's what I would recommend that you do. That if they might value the business differently than the parents do, that might be a source for the parents to go ahead and appeal any valuation that they feel is high, and just put forth a good effort and using the methods that are available to show that it's not worth as much as the school thinks it is.
Okay. And if there is a big discrepancy in valuation, do we know what the determining factor, how does this get settled? I mean, I take it doesn't go to arbitration, so what happens?
So my feeling is you would probably negotiate, and if there's a problem with the valuation of a business, you could probably speculate that multiple schools are going to be, you'll have to negotiate with multiple schools, and some of them may agree with your assessment, your revised valuation, others may not. So that's a situation that we have even with valuing home equity right now with CSS profile schools. For example, the IRS allows any valuation. They give you you're allowed a 20% quick sale discount on the value of your house. Now, some colleges, when they first start and give you your financial aid, they're not going to give you that 20% quick sale discount, but it is an IRS, it's right in the IRS manual that that's what they do. So again, if I was a parent doing that, I would get that support, that documentation from the IRS and say, even the IRS gives you a 20% break. University X, you should give me that 20% break also.
Okay. All right. We're going to go to what I consider to be the biggie, and that's probably on a personal level, because I think when we first talked about this, I told you I read this legislation and I immediately panicked for a good buddy of mine. This has to do with the elimination of the multi-student discount. And as I said, I have a friend who has triplets, and their last year is 2024, 2025. She did not take the news well.
Yes. So what Teresa is alluding to is, under today's FAFSA, the number that comes out of the FAFSA is called your expected family contribution. And that's what it is. That's the amount that the minimum amount that the family is expected to contribute for all the kids for college. So let me make up a number. Let's just say the expected family contribution was $20,000. Okay, so that means if you have one student, the first $20,000 is going to be paid by the family, and then in calculating financial need, they'll compare the total cost of attendance at that school minus the 20, and that calculates what drops out as your financial need. So if the school costs $50,000 all in, and your expected family contribution is 20, that means you have $30,000 of financial need, and the school will meet that either in a percentage of that, either in loans or work study and or in grants. The way this works today is if you have two kids in college at the same time, that $20,000 expected family contribution is split in two. So each child has $10,000 that they're expected to pay, and again, the family as a whole is only expected to pay the whole 20. That's going away with this new FAFSA. Under the scenario that we're talking about, each student would pay the first $20,000 on the college that they were going to, if the colleges only took the FAFSA. I just want to let you know right now that the CSS has so far, they're saying that they're not going to follow the rescission of that split for multiple students. So they still will give families a little bit of a break. Now let me go back and shoehorn this back into the earlier problem we had with divorce. A lot of times when couples divorce, in the divorce decree, or they may have an agreement to say, all right, we're going to split the cost of college for our kids, or I'll pay 30% of it and you pay 70% of it. That's often written into many of these agreements. The problem you can see coming now is if the cost of college is going to double now, the spouse that makes the least amount of money is now going to have to double the amount that he or she's going to have to contribute to college. So they didn't see this coming. And when you combine the two things, that also the spouse that makes the least amount of money, it's not his or her income that's going on the FAFSA, it's now the wealthier of the two income that's going on. So the total cost of college is going to be a lot higher. They're no longer going to get the split between the two students that they have in college at the same time. So the compounding of those two problems could be difficult for parents that are where the parents are divorced and they have multiple kids in college at the same time. It's a double whammy.
Right, exactly. As a matter of fact, I think I have up here the Brookings Institute little slider. Just give me a moment to share my screen so that everyone can get an idea of what we're talking about here. Okay, are you seeing that?
Yes.
Okay, so as an example, we're starting at family income of 0, so we're going to move this up to a more reasonable rate. So starting at 60,000, this is from the Brookings Institute, and I will drop a link in the chat if anyone wants to play with this themselves, and it's attached to an article that explains some of the upcoming issues. So a student with no siblings, according to this, gets $2,600 more in Pell Grant eligibility, whereas with one sibling, there's a drop of 700, and then with two siblings, a drop of 1,800. Is that in line with what you've calculated thus far?
Well, this is specifically talking about Pell Grant eligibility. So I would say that in addition to this drop, the lack of aid or the decrease in aid when you have two siblings in college at the same time is additive. So it's a bigger decrease than what you're showing right here.
Right. Well, I'm going to move it up a little bit. I'm going to jump to, let's say, 120,000. Where there's no Pell Grant eligibility, but yeah, those are some pretty eye-popping numbers down there.
Correct. And again, this is, as you said at the beginning so well, Therese, the impact of any of this aid is going to depend on what percentage of need each of these colleges meet, and also what the mix is. So if you have a school that takes this, let's just say, that meets 80% of need, the impact's going to be much greater on the family than if the need is only 50% of the need is met by that college. That's going to be a much bigger decrease if it's 80 versus 50.
Yeah, I'm just going to move this up a little bit more, just so, as I said, I'm going to drop the link in the chat, and when I put the video up, I'll put it in the description so anyone can have access to this. There was also a case study put out, and I just have to move to get to that. I'm not going to go through all of them because there were a couple that were a little bit out of whack, but I do want to go to the one that pertains to bear with me just a moment. I had it just a moment ago. Oh, here we are. Okay, so it's this example here, in example 2 of the case studies, where, yeah, now the new formula is has gone from the EFC to the SAI only because they thought it was a softer, gentler sounding name. There's nothing soft or gentle about this.
Yes, the student aid index, because as I overemphasized when we first spoke, the expected family contribution gives you the idea that that's all that the family is going to have to pay. The student aid index removes the whole reference to the family's obligation. Now it's basically that's what the student is, the minimum amount that the student is going to have to pay, or per student. So it all ties together. I understand what they're doing, and it's not nice, but you can understand the change in the terminology.
Yeah, the terminology changes, but at the end of the day, it's really just the impact that really matters to people. And yes, so that now, as I said, you've talked about the CSS, and I'm going to jump to that in a few minutes. But now I live in New Jersey, and I've spoken with our higher education authority here. We're not tied to the federal program, so they're trying to, I don't think there's been a decision made, but I think they're trying to find a way to soften some of these impacts. Now, you're in Pennsylvania. Are you tied to the federal?
I'm sorry, are you talking about the Pennsylvania state schools, or
The your what is in essence the Pennsylvania Department of Education, your higher education authority. Here it's called HESA. I don't know what it is in Pennsylvania, but if a Pennsylvania student is a resident of Pennsylvania and is attending a Pennsylvania school, either public or private, they're eligible for state aid.
No.
So now, is your state aid tied to the federal, or do you know any states that are tied to the federal that aren't free to do their own thing?
We have FEA here, Pennsylvania Higher, it's FPHEAA, and yes, it is tied in with the FAFSA. There's always a link where you can, where they get the information from the FAFSA, and they administer state grants based on the FAFSA information. Okay,
so again, this is so much depends on whether a student is going in-state to college, whether they're going out of state. There are so many variables that, yeah, and I think you explained something earlier that there was something in the sample FAFSA form for this year that wasn't necessarily part of the legislation. So as I said at the beginning, this is an ongoing fluid situation. So there's a lot to be determined. Okay, so we don't know. Some of the states may be really tied to the Department of Education, and others are free to do their own. All right, so let's, since you've talked about it so much, let's talk about the CSS profile. Explain to people what it is and how it may help soften the blow in some instances.
Okay, so for those of you that haven't had the joy of dealing with the CSS profile, it's another one of these double-edged swords. So there's about, I think it's 400 schools use a second form in addition to the FAFSA, and it's called the form they use is the CSS profile, and it's administered by the College Board, where the same place where you go to sign up for the SAT. These 400 schools, most of them are private schools. There's a handful of public schools, including University of North Carolina, University of Michigan. Some of your more elite public schools also require the CSS profile. And what the CSS does is, since it's run by it's utilized mostly by private schools, these are schools that are using their own endowment money to administer grants and aids to students. So they basically want to look a little bit more deeper. You know, they want to put their hands in your pocket and see if there's any change jingling at the bottom there. So a couple of the basic changes, the biggest fundamental changes between the FAFSA and the CSS profile is they include on the CSS profile your home equity. That's included as an asset. Okay. One of the other positive things about the CSS that I'm holding my breath on is with these changes to the FAFSA, the elimination of the dividing of your expected family contribution, or what's going to be called the student aid index, by the number of students you have in school at the same time. The CSS is still allowing that. And it's a little bit less than 50-50. I think you get a 40% break on the number if you have two students, so each student gets 60% of that student aid index number assigned to them. So they, at least right now, from what we understand, those at the CSS are going to still abide by their ability to split that. I think there'd be such an uproar if they did not, because those schools are so expensive to begin with. The ability for anyone but the wealthiest of the wealthy to go there would all but be eliminated. And again, the impact on, I'm the last of 7 kids from a blue-collar family from Pittsburgh and the first generation to go. And we're lucky that we had some state aid and some grant aid given to us. This would really impact, I think, some of those families that want to attend or are really bright enough to attend some of the more selective schools. It's great they can get in, but if they can't afford it, it's really going to suppress the ability, to bring the next generation up a little bit more.
Precisely. And from my recollection, that they just don't stick their hands in your pocket to see if there's any change there. They turn you upside down and shake you to see what falls out. And just to let families know, I know they still have fee waivers if you're under a certain income, right? Because unlike the FAFSA, the CSS is not free to submit or to send to the universities, which I took extreme exception to, but that's just me. So families should know that when they're looking at these schools. Okay, excellent. We're moving along here. I'm looking to see. Okay, now here's a question that how does any of these changes have an impact on independent adult students earning a second bachelor's degree?
Earning a second bachelor's. That's a great question. I don't have a good answer for you, Therese. I always learned from being a tax guy that there's always questions you get and you need to say, let me look at that up for you and I'll get back to you. But I don't have a good answer for you on that one.
Okay. If you could at some point, you can always email me, but I would like to know the answer to that. That was a specific question. Yeah, as we said, that this is an interesting sports night, so there were a lot of people who wanted to attend, but couldn't. So I said, well, okay, I'll get your question in anyway. So that's good. Now, I think this is a wishful thinking thing, and I certainly understand. I think I know what the answer is going to be, and I understand it. But I think this is someone who has 2 children close together, but they're not quite ready to go to college yet. They're in middle school. Is there any talk? Are you hearing any rumblings about possibly restoring that multi-student discount at some point down the line?
Thank you. Yes, there actually is a motion. I mean, I'm in a group of professionals that use software, and I belong to the American Institute of Certified College Financial Consultants. There's a movement and there's a petition out in front of Congress to have them to restore this. The software that I use is called College Aid Pro, and they're a huge organization. The software that they have developed is sort of like a preliminary version of what TurboTax was probably like when it first came out, and that's why advisors are the only ones using it now. But they realize how difficult this decision is going to be, and the great impact it's going to have on many families. And so there is a petition, and many of us have signed it, asking them to reconsider that portion or that elimination. Unfortunately, Therese, just like any tax law change or any pending change, a lot of people aren't aware that there's even a FAFSA Simplification Act. And they're not going to realize this change until it hits them in the face when they do their FAFSA and they get their bills from their colleges. I've been trying to ring the bell for those that have kids in school already, that if you were going to go start at a school and you have multiple kids in college at a FAFSA school, that to contact the financial aid department today and say, hey, I know this law is changing. Will you please grandfather me? Can you guarantee that you will grandfather in this level of financial aid to me for the rest of my students' 4 years of college? Otherwise, the risk that might be involved is a student's tuition may double, what they have to pay may double, and they may end up have to either take on excessive student loans or drop out and get a job or do some other things. And again, that works against the whole reason we're in this business, to try to help people. And it would just be a big tragedy. And I think that's when you'd hear a lot of people speaking out and having a few things to say to the federal government.
Oh, right. Yeah. I too signed that petition and I sent it out to parents, and it in my circle, way back, I think a year or so ago when we first started talking about this. And I'll let you in on a little secret. We hadn't discussed this privately. I'm not going to name names, but I recently had a conversation with a U.S. senator and talked about this specific issue. But if you remember, this was folded into what's called the Consolidated Appropriations Act, which I've always suspected that means 60% of what's in there wasn't really read. And so as I was bringing it up, the senator was looking at me as though I was speaking Greek or Fulani. It was clear that there was no recognition or appreciation for what I was talking about. I said, on the whole, I don't object to the legislation. There were some really good aspects of it. I said, but at the end there were a couple of things that are really damaging to families, and it was just. So this is the kind of thing that people really do need to write their representatives. They need to squawk and scream and take out bullhorns and everything that needs to be done, because this is. I know we talked about this and you've been doing all you can to get it out, and I know others that have, but it just. I'm disturbed that the media has done such a lousy job on this, because the first two places that I read it were Forbes and Business Insider. Most of the people that are going to be negatively impacted by this don't look at Forbes Business Insider, and that's not a knock on them. It's just. And so why the mainstream media, for lack of a better term, has not blasted this out is beyond me.
I don't have a good answer for you either, Therese. My thinking, and again, this is all just speculation, is just that so many of us are so worried about the next day, the next week, that they're not going to see this until they file that FAFSA and the numbers come in. And at that point, maybe there'll be some knee-jerk fixing that'll be done, but I don't know. I don't know how it's going to play out.
Yeah, I can't see it. It's took them. They've had 3 years to implement the changes, and they couldn't get it done on time. I can't see them doing a Hail Mary fix at the 11th hour, 59th minute. And I'm pretty much an eternal optimist, but I mean, we know the wheels of Congress generally move pretty slowly. So I think it's unfortunate. I mean, I would love to be proven wrong. I would be delighted to be proven wrong that they fix this. I will eat the crow. I will eat the humble pie. I will be happy with that. Okay, I'm looking to see. I don't see any other questions coming in. So let's recap for everyone, and that now, obviously, those that already have students in college are kind of on one track, and those that have students still in high school that will be starting in a year or two are kind of on a different track. So what's your thought for group A and then for group B? So for those that are already in college, I mean, unless I mean, there's always the option of transferring, but that's a hassle too, and that can throw things off. But for those that, particularly those with multiple students, I'm sorry, let me stop for a moment, because I knew there was one point that I wanted to make. When I read the reasoning behind the elimination of the multi-student discount, one of the explanations given was, well, that if you have two children who are far apart, and you never get a discount.
Mm-hmm.
And which is true. I mean, I only had one child, so this was never going to impact me,
Mm-hmm.
you know, whether she went to school 10 years ago when she did, or if she were going now. I wasn't going to get the discount. But I understand that if you have two children who are 6 years apart,
Yeah.
one starts and then finishes in 4 years, you have a 2-year break, and then the next one starts. And then you have those 4 years. So you have 10 years of, you know, all things being equal, you know, as long as you maintain your job and everything, you have 10 years of income to cover those two students, as opposed to as if you have twins,
Mm-hmm.
you have 4 years of income. So that was kind of a lame rationale to me.
Yeah. Teresa, if I can throw more gas on the fire, the way that the FAFSA calculates that expected family contribution number, I mean, it's made up of about 5.64% of your assets, okay, 5%, but up to 47% of your income goes into making up that minimum amount that you're expected to pay. So to piggyback on what you just said, the income has a double whammy during those 4 years, but you're still drawing two college tuitions out of that same income. And if the income is driving that high number, if it's spread out over, like you said, if the kids are 10 years apart, then it's a little bit easier to handle, because yeah, if the income is driving the number, then the income spread out. I'm using income over 10 years to pay for two kids' college education. That makes sense. But if you're penalizing me already with that income, then you're saying, all right, now that income's got to provide for two different college educations over 4 years. That's a double whammy.
Yeah, it is. And when I read that, it's like, excuse me, I know Americans are supposed to be bad at math, but nobody could possibly be that bad. And it's like 4 years, 10 years. I mean, it really is very simple math. I thought that was a rather insulting response. I don't remember the woman's name who gave it, but that was, I thought that was terribly dismissive, but that's just a personal thing. Okay, so let's get back for those that are already in. What's your best advice?
Okay, if you have kids already in college, and maybe you're getting a break because what you're expected to pay is being split up amongst two kids, I would today, maybe not today, because the rush of students coming in for the class of 2023 is going to be, you know, there's the financial aid people are going to be busy with them. But over the summer, I would contact the school that your students are attending right now and just say, I know these changes are coming. Can you tell me, can you guarantee me that my students' tuition is not going to go up significantly once these changes go in? In other words, would you kindly give me some comfort that you're going to grandfather my student at the same rate as they paid when they committed to go to your university? I would definitely encourage all of you to do that and get in front of this, rather than seeing this astronomical bill that might hit you down the road and then having to go back. Try to get out in front of it, and if they might do a little bit of a dance, but maybe this is a source of where you can do other kinds of protests or elevate this knowledge to the college, so that the other students that are in the same boat might also petition that financial aid office to try to get them to grandfather those that student aid in.
Okay, that seems like practical, reasonable, good advice.
Yeah.
And for those who have students on the high school level, you know, as they're making their college lists with all of these changes, seemingly, I won't say written in stone, but at least on the books for now. Let's put it that way.
Yeah.
How did you advise them to, you know, to pick, you know, to look for colleges, pick their colleges?
Yeah. Teresa, this is a really tough question for any family in any time when their kids are in college or in high school. I always encourage families to figure out what the net cost of all their schools are going to be over 4 years. And I know that's a big ask of most families. It's like asking me to go replace my water heater. You know, I don't do that. That's not what I'm trained to do. But for people, I would encourage you to try to figure out what the net cost of your school is going to be over 4 years. But here's the challenge. How are they going to do that right now? Are they going to go into the net price calculator at every school? I can guarantee you that none of those net price calculators have been updated to reflect that there's no longer going to be that discount for having 2 or 3 kids in college at the same time. So it's even more of a black box for parents to figure out or to try to guess what it is that that they're going to pay, you know, for college for their student, even based on their current finances. The only comfort that you might be able to get, and again, this is counterintuitive, is if you start applying to or looking at some of the CSS profile colleges. That way you know you're going to get that discount, but of course the sticker prices of private schools, you know, that take the CSS is through the roof. So you're going to get, I don't know, let me make something, you're going to get 50,000 off on 70,000, or, you know, 10% off on a $40,000 school. You got to run the numbers to see what it's going to look like for you, and just be careful. Just make sure you don't rely on those the splitting of the expected family contribution, or now the student aid index, if you're attending a school, or if you think your students might attend a school that only takes the FAFSA.
Okay, that sounds like a plan. I know there were 1 or 2 other things that you said you wanted to cover. Did we hit on those within the course of this? If not, most certainly, I invite you to share.
Yeah, just a couple of items, and I'm going to try to end this on a positive note. There are certain pieces of income that go into the FAFSA that the FAFSA Simplification Act is saying you don't have to worry about that anymore. So, child support. When you receive child support, that used to show up as income to the family, and you'd have to add that to the amount on your tax return when you'd have to report that on the FAFSA, and it would go into the calculation. You don't have to report any of the child support anymore. Same things with workman's comp is no longer added back. Another big one, and again, if you're lucky enough to have this problem, it's much less of a problem, but under the old FAFSA, when your grandparent or your uncle or aunt put money into a 529 and paid some of your college expenses, that used to show up on the FAFSA as income to the student. And again, the student's income would be assessed at 50%. So that would decrease the amount of aid they would get because you're getting money from your aunt or uncle or your grandparent. So that is now no longer an issue. So I would encourage parents to, if you have a 529 in your name, try to look for one of your brothers or sisters or your parents, and see if you can change the ownership of that 529, and that way it won't show up as an asset to you. It'll be on the parents or on the grandparents' books or on the aunts and uncles' books, and that way they'll still be able to pay for your child for college, but it won't hurt you in the aid calculation. And I know that's really complicated stuff, but it's a shame that this whole process is as complicated as it is. Again, I use the TurboTax analogy, but this whole college financial planning area is like preparing your tax return was when I first started, when you used to put a pen, you used to use a pencil on a form and photocopy it and send it in. It's archaic. Unfortunately, it is where we are, and just try to learn as much as you can about the process and go in with eyes wide open.
Okay. Up to this point, we've spoken mostly about, families, parents, guardians, whatever. And I did ask you about adult students, but now what about independent students who have who either are attending college as independent students or will be starting college in the 2024-2025 as independent students? How will they be impacted by the new legislation?
It's a good question. I think they are going to benefit by a higher Pell Grant. If they're eligible for Pell, the amount that they're going to receive is going to be higher. But I really haven't done a deep dive into that side, Therese, to really give a real intelligent response at this point. So.
Okay. All right. I will tell them to be on the lookout. Anything else you want to add or highlight? I think we've covered all the big points. And I truthfully, I hadn't planned on doing a whole program on FAFSA until I read this legislation a year and a half ago. And we had planned this for February, but then we got notice that the Department of Education was saying, we might be late. We might not. We don't know. We'll let you know. And then they finally let us know. And so we decided to go ahead and do this because, to your point about making it complicated, navigating the school system, particularly the public schools, private are a little bit different. And I don't have that many private school parents. They're mostly public school. That wears you down in and of itself.
Right. Yeah.
That is a challenge. I mean, my daughter's almost 30, so I haven't had to do that for a while. And I'm certainly glad I don't have to do it now, because it is certainly far more challenging. But because of these changes and because there were such significant impacts, I said, no, I have to. I have to do this. And I knew there was one other question that I wanted to ask you. Okay. In my readings, and this doesn't have to do with the legislation, but in my readings, I've been noticing a lot. There are students, college students that are just filing their FAFSA now. It seems that conventional wisdom says to be eligible for the maximum amount of aid, you should file as early as possible. So I'm a little surprised when I see so many students filing in the saying they're going to file. They're either just filed or they'll file in a month or so. So is there any validity to that? The earlier you file, the more likely you are to get maximum aid?
Teresa, that's a great question, and I personally have seen opinions on both sides of that. You don't need to file the FAFSA on October 2nd, or in this case, it might be December 2nd this fall. You don't have to do it right away, but there are some schools where maybe their institutional aid will be limited a bit more if you file later. But I think the government aid is one of those things that you either get it or you don't get it, and whatever the formula says you get, you're going to get. So I would encourage people to always file as soon as you can. File for it as early as you can, as you reasonably can. Tax returns should have been done for a while, so it's always better to file earlier rather than later, rather than taking a chance of getting shut out.
Right, and I'm sorry, I should have been clearer in that question. I meant the institutional aid, not the the federal aid. Schools with huge endowments, it's one thing, but some of the smaller schools that just have a smaller pot that they're working with anyway, and that's what I was really referring to by file it as early as you possibly can, so the door isn't shut on you.
I would say then if it's institutional aid you're looking at, then you really should try to file as early as you can. There's always another dimension to this institutional aid with especially the CSS profile schools. College Aid Pro, I mentioned that organization before. They did a study and they actually rated each school based on the transparency of in this case, the merit aid that they gave. And some schools are very, very transparent. You know, if your GPA is above X and your SATs are above Y, you're going to get Z dollars. Very transparent. Others, it's like it's like flying through clouds in a thunderstorm. You have no idea where they're coming up with the numbers, and they're very vague on their decision making. And again, it might be if you're majoring in geography and they need a couple more students in the geography department, you might get more money than someone who might be majoring in biology or math or something else.
Is that report I'm sorry to interrupt, but is that report accessible to the general public?
If you go to College Aid Pro, the website collegeaidpro.com, they did a study. I know they pushed out an email on it, and just if you Google merit aid transparency, they went ahead and assigned a grade to each of the schools. Again, these are mostly private schools that are giving merit aid, but you can look at that and see if it's going to. I don't know if they have a separate article on that, but I do remember seeing it, and I could certainly provide it too if after the session's over.
Okay, that would be great, because maybe that will help inform the decision-making process for some family students. Okay, we're almost at the hour mark, so I'm going to ask you to provide your final words of wisdom, and then we're going to close out the evening.
So I'm going to try to stay out of the weeds for these last couple of comments. Just the most planning you can do. The first step that all parents should take is to figure out what their expected family contribution, or in this case, the student aid index, is going to be. And you can find these calculators online, and that's going to give you a number that should give you an idea of what the minimum amount that you're expected to pay. Secondly, I would say, please, please, please don't let your child visit schools that are going to be out of reach. You would never send your child into a Maserati dealership or to a BMW dealership to test drive a BMW 5 Series when you can only afford a Toyota Tercel. And I give that advice to everyone, because it's, that ride and that pleasure, it's what they're going to end up attending, it will never feel the same. So don't go visit Duke or in Vanderbilt and some of these beautiful schools, if you know that you can't afford it. If you think you might be able to, have at it. But do your homework first to make sure you're not setting yourself up for a lot of tears in April when the financial aid award comes in, even though they might get into some of those schools. Right.
That is good advice. Well, Bob, thank you so much for sharing your knowledge, your experience. I really appreciate it, and let's see where this settles. We hopefully maybe we'll be able to do a short follow-up one that says, "Hey, we've got happy news for you."
I'd be happy to, but thanks so much for having me, Therese. It's always great to try to preach this. I just wish it wasn't as complicated as it is, but like anything, the more people hear it, the little bit more it'll sink in. So hopefully we helped a few of your listeners today.
Okay, that's great. Thanks again, Bob. Have a great evening. Have a great evening, everyone. And we'll see you next time. We're going to stop the recording now.